Governments don't just borrow money, they borrow time. When governments borrow, they're not just taking money. They're taking time from the future, and you're the one paying for it. Most people hear the word national debt and tune out because it sounds like something only economists should worry about. But government borrowing is not some distant topic. It shows up in your taxes, your savings, your cost of living, and even your job opportunities. And the wild part is, governments can borrow for decades, make it feel normal, and still leave the real bill for later. So today, I'm going to explain how governments borrow from the future, why they do it, who benefits right now, and how regular people end up paying the price. Stay until the end, because once you understand this, you'll stop being confused when life gets more expensive for no reason. Let's start simple. When a government borrows money, it usually does it by issuing bonds. A bond is basically an IOU. The government says, lend us money today, and we'll pay you back later, with interest. People buy those bonds. Banks buy them. Big investors buy them. Retirement funds buy them. Even other countries can buy them. And this is how governments raise huge amounts of money without raising taxes immediately. Now, here's the key point. Borrowing feels good in the short term. It makes leaders look effective. They can build projects, fund programs, fight wars, handle emergencies, stimulate the economy, and they can do all of it without telling people, we're going to raise your taxes today. So politically, borrowing is easier than sacrifice. That's why governments love it. It's like using a credit card to look rich while pushing the payment into the future. Pattern interrupts. Government borrowing is basically saying, let's make today comfortable and let tomorrow deal with the pain. Now, the first way governments borrow from the future, interest. When the government borrows, it must pay interest every year, and interest is not free. Interest is money that could have been used for schools, roads, healthcare, or lower taxes. But instead, it goes to debt payments. So the bigger the debt gets, the more the future gets chained. Because future budgets become less about improving life and more about servicing the past. Now, the second way, higher taxes later. If debt grows too big, the government eventually needs more revenue. That can mean higher income taxes, higher payroll taxes, higher property taxes, higher sales taxes, or new fees. Sometimes taxes don't rise loudly, they rise quietly. Small changes that add up, but either way, the future pays. That's why borrowing is like stealing from your future self. It feels painless now, but it reduces your options later. Now, the third way, inflation. This one is sneaky, because it doesn't show up as a tax bill. When governments run huge deficits and the system creates more money to support spending, it can push inflation higher. Inflation reduces the purchasing power of your money. It makes groceries cost more, rent cost more, everything cost more. So even if your taxes don't go up directly, your life gets more expensive. That's the hidden tax of government borrowing. The cost of living rises, and your paycheck struggles to keep up. Now here comes the cliffhanger. Why would a government choose inflation? Because inflation can reduce the real value of debt. If the government owes a huge amount of money and the value of money falls, that debt becomes easier to pay back in weaker dollars. It's like owing someone $1,000. But next year, 1,000 buys less. So your debt is lighter in real terms. This is why inflation can feel like it benefits the borrower. And guess who the biggest borrower is? The government. Pattern interrupts. Inflation hurts savers, but it helps debtors. And governments are the biggest debtors on earth. Now, the fourth way governments borrow from the future. Slower growth. When debt gets too large, it can crowd out private investment. That means businesses may borrow less, invest less, expand less, and hire less. Also, high government borrowing can push interest rates up over time, making it harder for people to buy homes and start businesses. So even if you don't care about politics, you feel it through job opportunities, wages, and the cost of borrowing. Now, the fifth way, dependency. Once governments become addicted to borrowing, they start needing it to keep things stable. They borrow to pay old debt. They borrow to fill budget gaps. They borrow to fund promises. And eventually, the system becomes fragile. Because if lenders lose trust, borrowing gets expensive or impossible. And when borrowing stops, spending must be cut fast, which causes pain. That's when you see sudden austerity, sudden cuts, and sudden crisis. So, borrowing from the future creates a future that becomes more unstable. Now, let's talk about who benefits right now. The first group, politicians. Borrowing lets them solve problems today and delay the bill. The second group, industries that receive government contracts. Big companies can get paid now. The third group, investors who buy government bonds and collect interest. And the fourth group, asset owners, because deficit spending and easy money can push asset prices higher. Stocks can rise. Real estate can rise. So while regular people are struggling with cost of living, people with assets can grow richer. That's why borrowing can widen inequality, even when it's done with good intentions. Now, let's make it personal. Who pays? Regular workers pay through inflation. Taxpayers pay through future taxes. Young people pay through reduced opportunities. Savers pay through weaker purchasing power. And future generations pay through smaller budgets. Because too much money goes to interest instead of progress. That's why government debt is not just numbers. It's time being taken from the future and turned into comfort today. Now, here's the big question. Is government borrowing always bad? No. Borrowing can be smart. In emergencies, wars, recessions, pandemics, crises, borrowing can keep people alive and the economy running. The problem is when borrowing becomes normal life, when budgets are always in deficit. When leaders borrow during good times too, that's when debt stops being a tool. and becomes a lifestyle. Pattern interrupt. Borrowing during a storm is survival. Borrowing on a sunny day is addiction. Now, what can you do about it? You can't control government policy by yourself, but you can protect your personal finances. First, build skills that keep your income rising, because inflation punishes stagnant income. Second, avoid toxic debt, because high rates can hit during debt-heavy periods. Third, invest in assets that can hold value over time, because cash loses value when inflation rises. Fourth, keep a cash emergency fund, because you still need flexibility. And fifth, think long-term, because the system rewards people who plan while others react. Here's the real lesson. When governments borrow, they create a future bill, and the bill shows up in many forms: interest, taxes, inflation, and slower growth. And the reason most people don't notice is because the cost is spread out. It doesn't arrive like one big invoice. It arrives slowly in higher prices, weaker savings, and harder life. So the next time you hear the word debt, don't think it's just a government problem. It's a time problem, and if you want real wealth, you have to protect your time, your buying power, and your financial freedom before the future arrives with the bill. If you want more money truth, financial history, and wealth lessons in simple language, subscribe to Cashfree World and hit like so YouTube pushes this to more people who need it. And comment below. Do you think government borrowing helps people or hurts the future more?